Hello, hello, hello. Hello, welcome to S7FX. I will be doing the backtesting. I will be doing the backtesting of AUD USD 2022 October. But first, let's forecast, and then after forecasting, I will be discussing the trades which I took today on my challenge account. So my one trade is still running. I took almost like two trades today. I had placed three entry, I remember, but two I two I was in two trades. One of my entry did not tag me in. So let's discuss all the trades. First, let me do the forecasting, then I will be discussing the trades which I took today. So the best way to do the forecasting is to just play the bar replay button. It gives you a better understanding of the price when I do this sort of exercise. So here I saw that the market was breaking the high. Perfect. I saw that here we had some sort of a flag pattern, but it was between the high and the low of, you can see that it was in between the high and the low. So first it break the high here, then just formed wick and retrace. When I saw the retracement, it was almost like 70-80% retracement. So here I was getting an idea that the market wants to be in the range. Again, so my expectation was that the market will break the low and then retrace. But market just retrace all the way up and just break the high again and retrace. Then what the market did, again break the high, again retrace. And if you look the entire market condition, it was completely inside some sort of ascending market condition. Okay, so I could see this entire weakness in the price. And at the top, I started seeing some sort of ascending nature. So I was waiting for a nice impulsive move to the downside. So if I could get a impulsive move to the down, I would definitely look for an entry. So here what I saw that these two candles broke the low. As you can see, first candle broke the low, but these two breaks were not very convincing break. It was like the market still wanted to be in the range. So I waited for the next candle, and the next candle was again trying to continue its move to the downside. See, the height of the candle was not that impressive, but if I look at the entire price action, like how the price action was going up, it was giving me some strength to think that okay, there is a chance that if the market resume its move from here, it can give us a nice uh, bearish candle. Okay. So I placed my order at around this area, despite the candle was not very good, but the price action was okay. And because the price action, the price was really ascending, and I at this area I saw some sort of uh, weakness to the price, and I saw 3, 4, 5 candles were breaking previous candle low. So after this candle, I placed my entry. Stop loss was 15 pips, which was almost above the structure. So I was okay. I was happy with the stop loss because the stop loss was not that good. Like stop loss was good, but the next candle did not tag us in. So after I saw this impulse to the downside, I removed my entry because I did not wanted to uh, get the entry just by single impulse. Then after this continuation move to the downside, 2, 3, 4, 5 candles, I saw a nice impulse move to the upside. So this was a big impulsive candle to the upside. Hi. So the impulse was quite good. If I look at the size of the impulse, it was quite good. And then I saw the timing. The timing was like after the London Open, I saw this move to the downside, and then it started its move again in the direction where previously I was showing weakness. Sometimes market does this sort of things, like you will see some weakness and then you will see a sudden move to the upside. After seeing this sort of impulse to the upside, I was like, okay, if I get an entry, I can risk 1%. If I and then I check the stop loss, like how was my stop loss? My stop loss was almost below this previous candle. So sometimes, basic in these sort of market conditions, sometimes uh, you can get a range bound market condition. Okay, because we break the low, trying to continue its move to the downside, it retraces. We break the high, but previous market condition was very ascending. Sometimes what happens, we get usually we get a range bound market condition, but here if I see the height of the impulse, which is almost bigger than these previous candles. Okay, if I compare this height, the impulsive height, okay, it is almost bigger than all the body of this candle is almost bigger than the past 3 or 4 days candle. So, and my stop loss was almost at the low of this candle. So, if I combine these two things, so I decided to take 1% risk. Okay, because I knew that if it continues its move to the upside, can give us a nice profit. And it was just after London Open. Okay, so usually when you get any move after London Open or at New York Open, so those moves gives good continuation. So this candle just tagged me in, and this was a retracement candle. Okay, so the next candle just broke the high and just retraced. So when it retraced at this area, I decided to close my entry. When it retraced almost at this area, first I managed my stop loss just below 2 pips below this candle. But when I see this sort of weak, so it gave me the clue, because earlier I knew that there is a high chance that we can get a range. Okay, but I decided to take 1% risks just because the timing and the impulse thing. So after looking these two things, I was okay to risk 1%, because if market continued this sort of impulse, we can get a good momentum. And if you look at the left hand side, we can see we have a clear candles. we don't have any range bound market condition. Okay, so we had some sort of clear candles, so I decided to, okay, let's just take 1% risk. So I exited this trade somewhere at around this area. To look at my MT4, so this was the exit. You can see, but it's not in MT5. We usually, when I drag this here, I usually see my entry at this area, but I don't know why it's not showing, why it's not coming. Let me just check. If anybody know how to, okay, trade history here. Now I can see why it's not showing trade history. The Euro USD trade, Euro USD pair. Oh, okay. Now I get. Here we have a trade history. You can see I placed my entry at around this here. Let me just zoom it. So you can see I took the entry at around this area, 2 pips, just you can see 2 pips above the high. Okay, it went up almost like 1.5% in my direction. You can see 22 pips, and then it just came down. So my stop loss was somewhere at around this area. But when I saw this sort of rejection and previous price action was not that good, so I just decided to exit at around this area. Okay, because it's a challenge. I did not wanted to uh, just give around like half percent. Just I don't did not want to lose a half percent. So just I exited at around this year because there was a very like above 90% chance that after this week we can get a deeper retracement or range bound market condition. So I decided to just exit at around this area. It was my first trade of the challenge. You can see on my Telegram, I just updated this. You can see I had just placed that first entry of my challenge account. And then after that entry, I took this trade, which was NJD USD. You know that I have started trading NZD USD. Okay, let me just do the forecasting. Then I will go up on the NZD USD trade. So here, after this impulse, you can see if I would be in the trade, it would have tagged me out at around a 0.2 or 0.3% loss. But luckily, I just managed to save some percentage. And here we are in the live market. We are in range bound market conditions. So just wait for NZD JPY. Yes, it's Euro USD and what I did say something different, or what do you want to say? If I say something different, then sorry. It's NZD JPY, New Zealand JPY, New Zealand dollar, Japanese yen. So let's move to AUD USD. NZD USD. Okay, sorry. So it's NZD JPY. Because I have dropped AUD JPY because I was seeing that the AUD JPY was not performing uh, good. So I decided to drop that pair. And I was also doing some backtesting NJD JPY. So here I got a bomb setup, but I did not. You can see that uh, market broke the high at around this area, breaks the high. As it breaks the high, so here we had a choice that we want to take the bomb or not. If let's suppose it's giving the bomb. So if you are beginner, you will definitely fall on this sort of thing. Will think that, oh, I have a nice impulse, we are getting bomb, so we should take the bomb. But no, you should always gauge the impulse or height of the impulse or momentum after the break of the high or the break of the low. You should not gaze this thing. Okay. Start gauging the momentum when the candle breaks the high. Before it, just don't calculate this that, oh, we have a 5, 6, 7 candle to the upside, so let's take the bomb. No, because you can see it just barely break the high. So after this, we got the impulse, but after this impulse, I can see we had some wick at the top. So I did not wanted to take this entry. We had an entry at around this area, but I did not want to place any order. Next, it started continuing its move to the upside. So after this black candle has broken the high, I think. Yep, this black candle had broken the high. So our high low has shifted from bottom to the top. So now we have new high low. And I could see that the market is not willing to continue its move to the upside momentum. You can see it started ranging. It was the day close. And when the new Tokyo session opened, we can see we had a big indecision candle. Then after this sort of candle, we usually see some sort of range. So we get that range till the pre-London timing. After when the London pin, it started continuing its move to the downside. But if you look at this impulsive move, you can sense the weakness in the move. Just see how it break the low. From here, this was a nice impulse, but it barely break the low. And after this impulse, when I saw this impulse, it was clearly giving me an idea that the market has started showing some weakness to the downside. You can see this candle is just equal to the wick of this candle only. If you look at the height of this candle, it is almost the wick of the previous candle. And if you look at the next candle also, it has a large wick. So after this sort of thing, I was like, okay, if I get a bomb, it must be some known pattern, which I know that sometimes what happens, we see this sort of weakness, but still does take the bomb because I have known some patterns which works like 70-80% of the times. So in this sort of market condition, usually I look for a high probability setup until, because I could easily sense that the market was losing its momentum. I did not want to take any bomb in this sort of setup until unless those bombs are very high probability bombs. But next candle was a big push to the upside. So I could see that after this candle, we can see we get a bomb setup at around this area. But I did not want to take the bomb because the weakness to the downside, I could sense the weakness. The next candle just came down, and the next candle just shoot to the upside. So this was a clear indication that the market can go inside the range. Was a clear indication that the market has now decided to continue its move the range. And if somebody wants to take bomb slash bullet entry, then again, if you see this sort of continuation of the move to the upside, you can easily say, if you look just this area, if I hide this area, if I hide this much area, then you can easily say, now tell me in which direction market should go. Even a blind, not a blind, but even a child can say that the market wants to continue its move to the upside. Okay. So if a child knows that a market has high chance to continue its move to the upside just by looking at these price action, then why would I take a bomb slash bullet entry at around this area just for the sake of setup? No. If your price action align with your setup, then only take the trade. If your price action does not align with your setup, there is no entry. So here you can see if I would have taken a bomb slash bullet entry, probably it would be a loss. And here I don't think it has just broken it had just broken the high. just by 0.1 pip. So we are still in AUD USD also, we are in big range. So there is no trade, just we will be waiting patiently for any setup. I took my challenge on, I remember on Thursday or Wednesday. And now after 7 day, today I get my first trade. So you have to be very patient. If you don't have patience, then this is not your industry. Just try somewhere else. Because after taking challenge, you it becomes very difficult to resist yourself to not take the trade, because you have put money on the table. You have bought the challenge, so it becomes very difficult for many people to not resist themselves to not take trades. Okay, I waited for my setup, and when I got my setup, then I only then I only took the trade. Until then, I was just waiting, waiting, waiting. 7 day straight, I did not take a single trade. Then when the moment came, I just take my entry. So if I do backtesting from here, so here we can see that we had some sort of V formation. After this V formation, we had some sort of range. Okay, so this range was expected after this sort of V formation. The market then started continue its move to the upside. But if you look at the height of the candle, it was showing some sort of uh, weakness in the market. Every time it just break the high, it was just forming some sort of weak. Okay, break the high, retrace. Then what we saw, it break the low. Okay, and after the break, it gave JPY pairs. Yes, yes. It started its move to the downside, but again, at this point of time, I was not seeing any sort of momentum. And then we get a nice candle which has a nice wick. So no entry. This was also a big candle, but again, there was no entry after this sort of wick. Waited patiently. We can see we get again a V sort of market structure, and then we get a range, and then after this V, we expected this sort of range, and then uh, move to the upside. So this was that move. Okay. It gave us a nice impulsive break to the upside. So, but the entry was somewhere at around this area, so I did not wanted to take impulsive entry. And also, this sort of candle has, if I see a wick, this sort of wick which has almost similar wick, whether it's a small or it's a big, but if it has similar sort of wicks, I usually try to wait for one more candle. And here I could see the market was starting its move to the upside. Okay. And then it break the high again. But again, the thing was that it break the high, giving almost the candle, which was a wick at the top and a wick at the bottom. So I did not wanted to take this entry. Then this candle was also a nice candle, but the thing was again, it barely break the high. And if you see, it has a wick at the bottom and it has a wick at the top. Despite the wick was small, but it has identical wick at the both the sides. If you get identical wick at the at both ends, so there is a high chance that it can take your stop loss. And get a deeper retracement in these sort of after these sort of candles. And here I could see that it is barely breaking the high. Break the high, weak. Break the high, weak. Again break the high, again weak. It was not giving me any confidence that okay, I want to continue my move upside. It was not giving me confidence. Then I got this candle. So it was a nice candle. Okay, but previous price action was not very. If you look at from this candle, after this candle, every candle was just wiki one or a small wiki break. If you look at the pullback, like how deep it pulled back, you can see it almost pulled somewhere at around 80 or 90, 70, 80% pullback. So you can gauge the momentum by looking at how deep it pulled back, how much candle it came down. By looking at these things, you can gauge the momentum of a impulse. So I could see that here the momentum was not that good. So after this candle, uh, I wanted to take the entry after this candle, because the thing was that I could also sense that it is continuing its move. So I thought that if it continued its move, it will give me some nice percentage. But I had already opened two positions at that time. You can see that timing was somewhere at around 3:30 PM IST, and I had already two opened position, Euro USD and NJ. So EU, I was already in EU and NJ. And if you are in a challenge, so don't try to, and both position were in buy. Okay, this was in buy, this was in buy, and my third position was also going to be a buy. So what I thought that, let's suppose if something happens, because like no matter how independent these currencies are, if it start fall, you can see that every currency will start fall, or if there is some strength, it will start range. Okay, so I had already two opened position and both were in buy, so I decided to just wait. Okay, I decided to just wait for either one of my entry get close. Okay, and the thing was that also that previous price action was also not quite very impulsive. I told you that it was just breaking the high, retracing, breaking the high, retracing, break the high, and now I get an impulse. So these all things let me think that made me think that this would not be a good trade to take at this a point of time. So that's why I just did not open any position at around this area. After that, we saw some nice move in EJ. Then we also saw some nice rejection, because for at this, when the candle was at this area, I was thinking that okay, it's forming a V-shape structure, but then it retraced all the way back up. Now we are at an area where we can get a bomb. But when you get a bomb, try to always gauge the momentum, like whether the momentum has shifted or not. If it has not shifted, or if it has shifted, then only take the trade, or based on that decision, then only take the trade. Don't take entry just for the sake of setup. If the setup is good, then take the entry. No, look at the price action, gauge the momentum, whether it's giving you strength or not. Whether, if let's suppose you take the entry, whether it will go in your direction or not. Based on those things, then take any decision. Let's move to NJ, and we can see that New Zealand JPY is at around this area for a long time. Okay, so the trade was pretty simple. Yes, I told you that sometimes what happens, the price action, what they will ascend and then give you a deep, like bigger move to the upside. They will descend, and then it will give you a bigger move, and it will continue its move to the downside. So here it is a classical example of ascend continuation. Okay, so you can see if you look at this price action, it was a clear ascending price action. Then we get a nice impulse. You can see each candle has nice body. This candle had some wick, but after this candle, we can see that we had a nice impulse to the upside, we get the setup. So I was having a close eye to this setup. I saw how the candle was coming. We saw here, we saw the weakness at this. Let me just remove it so then you guys can see it well. So here I could see that after this candle, I see we had some weak. Next candle, I saw again weak. The next candle just retraced. After this retracement candle, I again saw that the next candle has a wick. So these candles were clearly telling me that market is losing its momentum to the downside. Then I get this small white candle, which completes my setup. So I place my entry somewhere around this area, and my stop loss was 14 pips. In EJ, in NJ, I take 14 pip SL just on my back testing. Some people take 12 pips, some take 15 pips. So just on my back testing, I see that 14 pip stop loss in NJ is good. And after this, we got a nice impulsive candle to the upside. Then the next candle was also good. Then after that, we started seeing some sort of weakness to the market. Okay. And we can see it has not broken the high. So right now, uh, I am still in the trade, but what I have done, I have managed my position at around break even because it's a challenge, and I don't want that the market comes down and just take me out. So there's a high chance that it will break the high. So once it breaks the high, I will be managing my stop loss somewhere somewhere at around this area. I'm just waiting for this candle to break my break the high. Then I will be managing this trade. See that this position is still running. Check. So it's still running. So you can see I have placed my stop loss at around break even. Yeah. Because if you are in a challenge and it comes down from 2% to hit your stop loss, then that's not good thing. Okay, we have done almost all the backtest forecasting, and I have also discussed about my trades I took today. Now let's start our backtesting of AUD USD. I have placed the alert around this area. Let's do a quick backtesting session because it's a good exercise to uh, do a daily backtesting. When you do a regular backtesting, you get confidence on your setups. Okay, you will start getting confidence on your setup. You will not hesitate to take the setup when you do regular backtesting. Will give you confidence to take your setups regularly. So we have marked our high and low. We are in a range. See whether it broke partial in range. The market just broke the high. As it broke the high, our entry would be somewhere at around this inside bar. So if the market comes directly at your entry, there is a high chance it will take your stop loss. Is a sudden entry, so just wait. And you can see it's also a V-shaped recovery. So after this sort of thing, we expect some sort of range. And why after V-shaped recovery we get a range? Have you ever thought about it? Because the momentum with which the market going up, with the same momentum it's coming down. So if both sides have equal momentum, so where the market will go? It will go sideways, because both the buyers and seller has equal strength. Once you will start gazing the market like this, where the market has shifted, which has strength, then you will start gauging the momentum. And after those sort, when you learn how to gauge the momentum, then you will see that eventually your entries started, your entries will start improving. You will start getting good trades. So here we can see that the market is completely inside the range. After this V-shape recovery, we had this range. Okay, so we can see that this was just a fake out. So the fake out, the market is still again enter into the range bound market area. So if the market is reaching inside the range bound market area, so try to avoid taking any trades. Okay, in these market, in the condition where to the left hand side you have an area where the market is in range, you'll see most of the time it will just go up and will come down and hit your stop loss. Here we can see that the market has broken its range. Here we saw that went up, retrace, again went up, retrace, and now it's again trying to continue its move to the upside. So in these sort of price action, usually two things happens. First thing, it can give you a fake out and the candle and the market, and it will just give you a big black candle like this. Okay, like here what it did, you can see just came down and it just faked out and again went inside the range. So here we can again get this sort of thing. Okay, and if I see the height of the candle, or I see that it has a small wick at around this area and it has small wick at around this area. So after seeing this wick, I would like to just wait for one more candle. And after this candle, I saw that okay, it has some wicks. I don't want to take the entry. See, it was just a fake out. Like here we got a fake out, and again here we got a fake. Why I did not take the trade? Because I saw, first thing, I have told you that if you have wicks at the top and almost like equal wicks at the top and the bottom, so be aware, be cautious in these sort of candle. Second thing, it was just an area where we are seeing some sort of rejection again and again. And if you look at the height of this candle and height of these candles, so it was almost similar or smaller. Let me just clean the chart. Then you can see, because this is a good example. But see, break the high. Okay, the first warning sign for me was it has a wick at the bottom and it has small wick at the top. So if you have similar wick at both the sides, there is a high chance it will give you a deeper retracement or give you a range. So this was my first warning sign. My second warning sign was the height of the candle. If I look at the height of this candle, and if I look at the height of this candle, it is almost identical. It must be bigger. It must be like this. This is a good candle. But I can see that the height of this candle was not that good. Okay, and it just fell down. Again, it came inside uh, this range bound market condition. And see what happens when you see a breakout, fake out. So there is a high chance you can get. See here, it did not happen. Here we get a fake out, but again, fake out to the downside, fake out to the upside. So when you get a fake out, there is a high chance it will uh, go in the opposite direction. There is a high chance, but sometimes it does work, sometimes it does not work. Like in this case, it doesn't. It did not work. Here it break the low, but has a large wick at the bottom. But to take any trade again, wick. If I get any bomb slash bullet entry, I would like to take that entry. Sorry. If I get any bomb entry, I would like to take the bomb entry. We have a large wick, so waiting for some nice range before taking any bomb. We are getting good range, so let's see whether we get a bomb. Okay, here we have our bomb setup. We got this much range. Okay, we had a large wick, but after this wick, we saw some range. We get a breakout, but after just this breakout, we get this black candle with our setup. So here we got the wick, we got range, then we got our setup. I would like to place my 1% risk, just 12 pip stop loss. Okay. Here, what the market did, let me just say this candle has just hit 3%. Okay. And this candle could not break the low of this black candle. So I could manage my stop loss at around this area. I am writing a 3%. 1 hour has been finished. So let me just look at my trade. How is it? Not, I have not. It's retracing. There's a like after looking at these sort of price action, we can say that it's a low chance that it will continue its move to the upside for long, or it will resume its trend. Because here we can see that the market has started losing its momentum. Let's wait for. Well, this is just first 5-6 minute of a 1 hour candle. So usually what happens when you see the first this sort of move in first 5-6 minute of the candle, there is a high chance it forms a wick and then it continues its move to the upside. So that is also the case. So just wait for time. Hello, MJ. Just tagged me out at around 0%. Here we are getting a large wicks. So if I get any impulse, I would like to wait for good confirmation. You are taking a trade without any price action or without any logic, then those are very low priority trade. Just wait for a good, nice, impulsive candle. Here we can see that the market is continuing its move to the downside. The candle is quite bearish. We have our inside bar. What is we have our inside bar. So let's see if we get an entry. It would be a good trade. Stop loss is 12 pips. Is almost above. Okay. It's Monday, and it is just 2 hours after opening of the market. So usually I wait for 4 hours before taking any trade on Monday. Just give me a minute. Give me a second to plug my charger. So here we can see that hours of see. Usually we get this sort of uh, move after opening of the market. So wait for at least 4 to 5 hours after market open. Now we can see the market continuing its move to the downside, but we are getting big wicks top. Set. Here it's almost some sort of indecision candle, I would say. It's not a very big body. If the body closes somewhere around this area, then I would definitely take the entry. But now it's forming some sort of indecision candle, so I don't think this. Then we got a big wick. Broke the low, but it has just barely broken the low. It's not giving me that sort of confidence to take that entry. And after this week, I don't want to. You can see these candles were showing some rejection from the top, and this candle rejected from the bottom. Our entry was somewhere around this area. This would be our bomb slash bullet entry. But if a single candle gives entry, let's suppose single candle just open here and entry giving you entry at around this area. And if you come look at the height of this candle, it is almost similar to the height of the candle, like the impulsive candle. So there is a high chance if you see this sort of candle, it may continue its move to the upside, or it may give you a deeper retracement, which will hit your stop loss. So in this sort of market condition, you should wait for a small candles to hit your stop loss or to tag your entry. Now we can see that we had some sort of ascending market condition, sorry, descending market condition. Okay, we saw a break the upside, had some sort of move, retracement, and now it's showing some sort of continuity. Okay, so I have a rule that if the trend has originated in the range and it's break the high, then it may continue its move to the upside. So let's just take that trade. And if we compare the height of the present impulse to other candles, it is of good height. Take this trade. I don't think it has tagged me in. Let me. If it would have not tagged me in, I would remove my order. Okay, it has not tagged me in. I'm just removing my order because that sort of wick can easily send the market into the range. I don't want. Here we see a big V structure. Usually we know that after this sort of V structure, we get range. And this is the range which is forming after the V structure. Wait, try to take any entry in this sort of trade condition. We have lots of big candles. We have lots of V structures, so we're not getting any. Here, we got a V structure, we got some range, and now we are seeing some sort of move to the upside. So let's see if we get any entry. But if I place an entry somewhere around this area, that would be a very deep entry and a sudden entry. If you get this sort of sudden entry, there is a high chance you can take your stop loss also. Just to wait, and as it breaks the high and breaks the low, so no entry. Just again, it's forming some sort of range again. It's forming bigger range. I don't want to take any entry in this sort of market condition. Just barely break the low. Look at how it broke the low. It just barely broke the low. And if I see the previous market condition, it's completely inside the range bound. I can sense that we can get a deeper white candle, this sort of price action. We are getting some sort of nice move to the down. So here we are getting a bomb entry, but if you look at these candles, these are the candles which has started losing its momentum. And if you look at these candles, it is showing that it has started gaining the upside. So in this sort of market condition, don't try to take the entry because there is a high chance it can give you a deeper retracement also. Because here it has started losing its momentum to the downside. If you look at the last three candle, all three candles have broken the low, but the break was just by the week. If you look at it, break the low just by week. It again break the low just by week. It again break the low just by week. So in this sort of market condition where you see that the top or bottom has started losing its momentum, you can get a deeper retracement. And also if you look at these candles, you can see just hide this price action, hide this price action. And I try to see what do you think where the market should go. It should go down or it should go up. You can say that there is a high chance after looking at this price action, you can say that there is a chance that either the market can go up, or if you ask from me, I can say that the market should go inside the range. Okay. These are the probabilities. Most of the time the market does this sort of thing, but these are just probability. There is a chance that it can continue its move to the downside also. But according to my analysis and according to my previous data, I have seen that this sort of price action gives a deeper retracement or a range bound market condition. This is a very good exercise. If you see, sometimes what happens, like new traders always struggles in taking bomb. Like how should they take bomb? Try to hide the left hand side price action and look at the price action after the impulse. And what you see, is it looking aggressive, or is it looking range bound, or is it looking uh, good for bomb setup? Then try to take the entry. So here we can see that market has formed V structure to the downside, then V structure to the upside. These are clearly signs. These are showing the signs that the market may go inside the range. Here the market has broken the low. After the break, we can see we are getting some sort of wick at the bottom. Wait, we look at the price action to the whole. We have a scenario where market is completely inside range, V structure, range. So this sort of price action, try to avoid taking any entry until unless that entry must be very high probability entry. Way to take any entries. Now the market is trying to continue its move to the downside. And if let's suppose I see my entry, this will be my bullet line. If let's suppose the single candle gives me an entry somewhere around this area, there is a high chance it will retrace all the way back up. I don't want to place any entry right now. To get a sudden entry like this, there is a high chance it will send your entry in the stop loss. So don't try to take entry in this sort of market condition. Take the high again. Now it's trying to continue its move to the upside, but again the thing is that we don't have any clean price action. Okay, so just wait. We have our entry at around this area. It's very deep entry. Looking at the price action, we can say anything, but this impulsive candle is quite good. It has almost broken all the range. Okay, it has almost broken all the range to the left hand side, and now there is a high chance it can continue its move to the upside also. So let's just place an entry at around this area. Let's suppose tagged us. Let's suppose it tags us in. Try to take this entry. Well, pick a stop loss. Just hit my entry and just hit my stop loss. That's okay. That's fine. I was willing to risk 1%. It was a well calculated risk because if let's suppose you can see that it has this is the impulse which broke almost all these ranges. Okay, this is the impulse which broke these ranges. So if this is the candle, so if it continued its move to the upside, there is a high chance it will continue to the upside. but it was just a fake out, so that's okay. Just wait. Again went inside the range, so it does happen sometimes, you know. And this is the frustrating part of the range. But if you see a trend has already originated inside the trend, so here if this would be a normal impulse, then I would definitely avoid it. Okay, but I saw that it has already originated from the range. So if you see that the trend has already originated from the range, there is a high chance that it may continue that range, that trend. Okay, but here in this case, it did not continue, but that's fine. In these sort of market condition, try to just save your capital. But if you will not, like, don't be very conservative. Try to take a high probability trades only. Don't take random entries in these sort of market condition where you have large candle to the upside, large candle to the downside. See, we had a lots and lots of wicks. So if you try to take an entry somewhere at around this area after this candle, don't forget like how the price action is coming down. Can you sense the price action, how the price action is coming down? Look at the V structure. Okay. These all things were telling me that don't take any entry at around, there could be a loss. Now here we again get a break. Market is trying to break this range again, and now again trying to continue its move to the upside. So let's try to take the entry again more time. And these are like a high probability entry. These are not just a random entry. These are high probability entry. If you get, if these entries works, then you can get a nice profit also. Okay, so this was a Friday, so we usually don't take uh, trades just after 7 p.m. So it is almost at 12 a.m. So it's not free. But anyway, this was a nice entry. If it would happen somewhere at around this area, then that would be a nice area to take the trade. But right now it's not, because and just wait for 4 hours the market open. We are getting a V-shaped structure, and again we can. I am sensing some sort of fake out again. Let's wait and see whether it continued to move inside the range. Then it's again a fake out and V. So again it was a fake out. It was a fake out, and the market is again trying to continue its move inside the range. It is trying to continue its move inside the range. Here we are seeing some sort of continuation of the trend. If I see this thing, break the low, trying to continue its move to the downside. We have pullback, but the problem is, see, this is a very minute thing if you can understand this. So here we can see that compare, look at the height of this candle and look at the height of the retracement candle. It is almost identical. So let's suppose you want to go in a direction, and if you have a similar sort of a strength, like let's suppose the wind is blowing at the same speed with which the speed of your car, so where will your car go? It will just remain at the same place, because both sides has equal strength. And here I can see that strength, not seeing any sort of weakness to the upside, and previous price action is also not allowing me to take that trade. Otherwise this is a good continuation move. This candle itself is a very high probability candle which continued its move to the downside. So let's wait for one or two more candles. The wick is not good. See, just gazing this much, just the knowing this much candle, we could say that uh, for many people it would be a continuation to the downside. But if you gaze this candle by candle, you can see that this candle is almost identical to this white candle. And then after this black candle, we see the weakness at this candle. It could not even break the low and close below. Just break and just went up and closed above the low. And the next candle break the low, but the previous price action was not very healthy price action to continue its move to the downside. Okay, and the left hand price action was completely inside the range. So if you have this much this side of this sort of price action, and then you must have to read the every candle. You have to read the price action candle by candle. If you have not a clean left hand side, if you have a clean left hand side, you can take a lenient entry, I would say. But if you don't have a clean left hand side, just wait for some nice good entries. So here we got a break. Our entry is very low, so I don't think the market comes that much down. I would like to take entry. So see, this is if this will form a bomb. I don't want to take the entry because according to my plan, I wanted to see some sort of like 2 3, but we should also not forget that the market is trying to break this range and trying to continue its move to the upside. So if let's suppose this gives you a bomb, then there is a high chance after this range there is a high. Let me just check whether we have formed the bomb or not. We have a wick came down, retrace, then this white candle has just broken this retracement candle. Okay, and here we have formed our bomb. The thing is that if I look at the entire price action, then it's telling me that if it continued its move in the present direction, it can give us a nice nice RR, because the market was completely inside the range. Okay, we have this was completely inside. Market was completely inside the range. This was a first attempt to break, failed attempt. Again, it formed some sort of resistance at around the it formed some sort of range at the sub resistance, and then it broke from the resistance. If I get an entry somewhere around this area, there is a if it continued its move to the upside, there is a high chance we can get a good move. Sometimes you have to read the price action. Let me just check whether a loss or okay. I am still in this trade. Let's suppose if I would have taken this entry at around this area, I would be still in this trade. Let's see whether it's continued. Because there was a wick, and after this wick, I got some range. 1, 2, 3, 4, 5, 6, 7 hours of range. Okay, we had a wick, but after this wick, we got some range, and the previous price action was telling me that okay, if it continued its move in my direction, there's a high chance we can get a nice impulse to the upside. Despite, see, I see that we have a big candle to the downside, and there's a high chance it may take my stop loss. But I try to do my backtesting as real as possible. I try to do my backtesting like I am doing my live trade. Choose, okay. See, this was uh, the candle to the continuation impulse. These all candles were continuation impulse. Till this wiki candle, we all had a continuation impulse. Then we got a down candle, and then we get a retracement candle. It is a simple one. Uh, Market went up, came down, we got an inside bar, and as we know, inside bar retraces in both directions. So the low of the inside bar has formed this thing, and when I got the break by this white candle, we have and close in white in close in positive like a white candle, then we have our entry around this area. I think it's now you can, as we know, inside bar retraces in both directions. So as this inside bar break, our entry is somewhere at around this area. This much price action is our inside bar, the white candle, this inside bar. Okay, just by some pips, it again could not hit my stop loss. Now I can, it had just broken the high. So as it has broken the high, but still we did not get any retracement candle so that I could manage my stop loss. But as a 3% rule, I could manage my stop loss at around this area. I don't count this. Let's just continue. Let me just check whether you have. Let me just see. Okay, now continued move, because see, the thing is that I could smell this move. Okay, I could feel it. If you look at the price action, my eyes were. You have to, when you do a like back testing, you could not, you cannot afford to lose this sort of price action where we have a range. First market tried to break this, it gave fake out. Then again we formed a range at the support, okay, a range at the resistance, and then we saw this impulsive candle to the upside. So sometimes you have to, you cannot uh, overlook this sort of price action. And then here I took the bomb. We had some week. After this week, I could see that we got a range of 7-8 hours of range, and then see, we are trading in a 1 hour time frame. So this sort of range is like just a small range. But if you look at the lower time frame, this is a big range. It's the 8 hour of range. 8 hour of range is enough range. Now we can see we get a nice move to the upside, but we have still a complete risk on the table. We have make 3%. We still have risk on the table, so we cannot take any entry. But this is a very good bomb entry. Price action wise, this is a perfect bomb entry. We can see we have a impulsive move. We have a small bomb. So this is a nice bomb entry. Now it just given us a break. So I will be managing my stop loss somewhere around this area. Now the candle has again broken the high. Just give me a second. So it just dragged me out at around 7.38%. And here we can see we are getting some sort of ascending market. Sorry, we are getting some sort of ascending market condition. Okay. But the break is not very convincing. Okay, we can get a deeper retracement. Just wait. The market is inside the range. Now we get a break, but our entry is somewhere around this area, so I don't want to take a sudden entry. Is that high? It just barely break the low. Now again, the market is showing some sort of range bound condition. Breaking the high retrace, breaking the low retrace. They're not good sign. Wait, just broke by this Monday. Just wait for 4 hours. We are still in a big range. Here it has just broken the low, but our entry is somewhere around this area. Don't want to set an finished month of October. So let's see how much percent. So we have taken a 3 trades total. 3 trades. 3 trades. We have a 1 loss and 2 winners. Almost a 8% winner and 1 loss. So we made somewhere around 7%. Let's suppose if I close my entry at around 3%, then I could made around a 5%. Okay, it just mention it in our so here we made 7%. Here we made 6 minus 1 5%. We had 2 winners at around 5%. We have 2 winners, 1 loss. Here we have 2 winners, 1 loss. Okay, that's perfect. Let's just check our present entry. If you have any doubt, you can ask me. Let's check our present entry. We are still at that area. I don't see. Usually, these sort of thing happen either if the market wants to break, this resistance, okay, this top. So this sort of thing happen, or if the market try to, let's suppose this is a resistance area. So usually this sort of things happens when the market wants to break that resistance area. So this sort of thing happen. Or the other case is that if the market wants to give us a deeper retracement like this, then these sort of things happens. Okay. So cannot say anything. Just to wait and see what the market does. Okay, I am still in this trade. You can see it's going up, down. Let's wait. Okay. Bye bye. Happy trading.